Hopefully you can see my screen.
Yeah, we can.
Okay, great. So this is my 10-minute talk. No guarantees that it'll actually be that long, but I'm going to describe to you who I am and what Mobile Mortgage and Finance does for its clients, and give you a little bit of an idea of what the mortgage process is like in Israel, especially from the eyes of an Anglo Ole. So just a little bit about me. Dina's husband, Mordechai Yaakov Ateret Gila and Tehila's father. By the way, you can ping me if Yaakov in the middle of his university studies is also looking for part-time work. Who I am otherwise, I started the mortgage industry in Los Angeles in 1985. Boy, it does sound like a long time ago. By the end of the 80s, I just decided Israel had to be home. In the 90s, I was traveling back and forth. I actually had the opportunity in a couple of instances, this one that I list here, working with a bunch of very innovative government officials. It sounds like an oxymoron, but they do exist. Working first regarding creating a secondary mortgage market, and then creating the Israeli version of a consumer credit reporting law known as Chok Natuni Ashray. And by the end of the 90s, I was basically, settled and not moving around. I've been a serial entrepreneur in a number of tech startups and have a couple of inventions to my name, either filed patents or issued patents. Some unknown facts, that B is for Benjamin. And my passion is turning everything I do into a digital platform. And that's what I'm working on now. If anybody's interested in hearing more, being an alpha tester, I'm more than happy to speak with you after. So really what I do is I give the client a sense of security by being their guide and giving them some sense of context in everything they're doing. So everything from understanding the steps required in order for them to get a mortgage, managing their expectations, because we'll see there's a lot of things that are perceived incorrectly, and the incorrect expectations can kill an otherwise really good deal. Understanding the loan amount that they could possibly get and what those terms mean, understanding how to choose, meaning the ramifications of each, and having the context and having the knowledge to have the context to really be able to make a choice that they're cognizant of what they're choosing. And again, it ain't a rose garden. Everybody knows the mortgage market here can be crazy. So there are often unexpected things that come up, and helping them handle those things and working with their lawyer, broker, whoever it may be, to resolve the issues. I find
Ouais, je cherche maintenant.
Moshe? I think we might have lost Moshe for a second. Let's give him 2 seconds. If not, worst case, I'll put you into breakout rooms and then you can continue afterwards. Moshe, are you with us?
For some reason, I see only you, Helena.
Yeah, I think we've definitely lost Moshe.
No,
yeah,
it looks like we lost everyone. Oh, no, you're there.
No, everyone's here. Apart from Moshe. I was still doing the breakout room, so, okay. So let me just call him. Do apologize. This is the issues with technology. Okay, let's see. Maybe I will.
Bear with me 1 sec. I'll reshare. Thank you.
Thank you.
Go back. So I was just saying, the main concepts are the idea of the sometimes assumptions and misinformation that goes out. And for those of you that are professionals, understanding why it's not just Americans, it's English, Canadians, South Africans, Australians. Most of the Western world has a mortgage market that is a factor longer than the Israeli mortgage market has existed, and it has a lot of regulations focused on informing the consumer before they do anything. So today we're going to talk about the Bank of Israel regulations, which for the most part are relatively new, meaning when I say new, meaning over the past 10 years, because it was really only after 2008 that their regulations started really affecting how and what people can borrow. And there was a period, there was years from 2010 until 2015 where there were literally new regulations every 6 months. And there's a lot of things you'll be surprised to find out that are actually dictated by the Bank of Israel versus the local bank. We're going to talk about mortgage disclosure in Israel, or I should say the lack thereof, types of interest rates, and there's a big difference. Loans, what does it mean to have a loan with multiple terms? Loan to value ratios, which are one of the most critical things in determining how much you can borrow. The loan process, what does it take to get it approved? And then insurance, what is required and what Errol can help you get. So I have to understand, in the US, in England, in many Western countries, the mortgage process is something that's a high touch, high service, literally delivered to your home to sign. You don't need to get anything other than give them certain things up front and mainly your permission to get information. Versus Israel, again, which is a very young market, is still a paper chase that it's up to the borrower and it's the borrower's responsibility to get a broad range of things that we'll see. So getting back to the Bank of Israel. The Bank of Israel, again, is following something internationally that's known as the Basel III Accord, which is an agreement by a bunch of countries that say, listen, based on 2008 and based on prior situations, we have to all understand risk. So we have to have a way of standardizing these things. So that means certain things like ratios become a major factor. So the prepayment, the loan to value and the income, the ratio of your net after-tax income to your mortgage, to the mortgage payment is a factor that's actually dictated by the Bank of Israel that the bank can't play around with. Helena, I think there's some background noise. If you can make sure everybody is muted.
Yeah, thank you. I will do.
So we'll go into that. Prepayment fees apply when you have a fixed rate mortgage and you want to pay it off early because rates are currently lower in the market. Unlike other markets like the UK, US, Canada, etc., it doesn't always make sense economically because of the regulation from the Bank of Israel regarding prepayment penalties. In America, you have 40 years plus of regulation that basically makes the responsibility from anybody like myself or anybody working in a bank, a secretary in office, before they can quote a rate, they have to be licensed. And for example, in America, when somebody gets rates quoted, within 3 days, it's a federal regulation, within 3 days, they have to get a disclosure. It's like about a 10-page disclosure of what that means. For example, in Israel, nobody will ever explain to you when they quote you a fixed rate that's a samud l'madad, that's fixed to inflation, right? Helena, I'm getting a lot of background noise. I can. For example, that they won't explain because they're not always familiar with interest rate. We'll see in a sec that is linked to inflation, right? Actually, the reason the APR, which is annual percentage rate regulation, was created in America, so people really understand the overall cost of what money is costing them, right? So in Israel, there are some regulations regarding disclosure, but they're not much. So while they do disclose certain information, my slide gives an example. It's not necessarily, you're not getting the whole picture. So it's always important that you ask and you make sure you understand everything beforehand, because unlike other countries, most of the disclosure only comes into effect when somebody's already signing loan documents. Now, a factor, interest rates, real interest rates versus nominal interest rates, or ribit samud lamadad, right, versus ribit lo samud lamadad. So, and again, for those of you, many of you understand interest. For those of you that don't, think of it like rent you pay on an apartment. You're using money and you're paying rent to use that money. Unlike your apartment, right, what you're renting constantly varies in size. So from month to month, your apartment always stays the same size, hopefully, right? With the money you borrow, you're borrowing less, assuming you're amortizing and paying down principal. So every month you're paying a little less rent because you're borrowing less. Okay, now, question is, real interest is something that's very important to investors, right? So an investor wants to know what's an investment's worst enemy, inflation. So if they're getting X% and inflation is 2 times X, they're losing money. So they want to know what their real interest is, and their real interest could be negative. That's why in this country in the 70s and the 80s, when, by the way, the government was putting out all the mortgage money, everything was, or significant majority, 90-some-odd%, was fixed to inflation. So you had a kvua, you had ribit kvua, a fixed.
Moshe? Interesting. Moshe, are you with us?
I can't hear him either.
Yeah, no, neither can I. Okay, let's give him a few more minutes to come back. And worst case, we can just do breakout rooms a little bit early and he can finish afterwards. And it's just, and I do apologize, everybody. I think sometimes with lots of Zooms going on in one building, it can be a little bit tricky. Okay, yeah, I think we've lost Moshe. Okay, let's see if he comes back in like a minute. And if not, then I can now open the breakout rooms. I've now at least organized them so we can just open them up and we can finish the talk afterwards. Actually, Ilan, are you with us? Ilan Rubenstein? Do you want to introduce yourself? Ilan, are you there? Ilan? Yeah, there you go. Ilan, do you want to introduce yourself meanwhile? You're on mute though.
Unmuted.
Yeah,
okay,
brilliant.
Hi. Can you hear me?
Yeah, we can definitely hear you.
Okay, so good morning, everyone. Ilan Rubenstein, Ilan Estates and Investments, based in Modi'in, operating nationwide, licensed by the Ministry of Justice since 2000. If they've had enough of climbing stairs with Ilan, they must confer. Births, deaths, weddings, and divorce are triggers for you to refer. If they can't make it through the end of the month to downsize or relocate, for integrity and results, call Ilan Estates today. I help people who need to move on to the next chapter, particularly in this difficult period, COVID, if they've been laid off. I take video of the property, I promote it abroad. I've been going to Housing and Aliyah Exposing since the last 19 years. So we can get that reach out there and market that property, even if people aren't necessarily coming to visit. People have been making offers on properties from abroad. They send their siblings or their children to come and look at it. So I can hold your hand. Native English.
Power challenges, connectivity. Okay, so I'm not sure if you saw this one, but it is nominal interest means you see what you get. So when you get kavua lo tzmuda, that's nominal interest. Okay, same thing with adjustable prime, etc. You know what you're getting. Versus when you're dealing with something that's samud lamadad, which is real interest, you really don't know. It's an adjustable rate of interest that will be subject to inflation, So it can vary to that there is no limit, and they are subject to something that's called negative amortization, meaning there were periods in Israel where somebody paid their mortgage over a 10-year period and they actually owed more in the end than they did in the beginning. Now, we have had over the past decade and a half an extremely low inflationary climate, and that's been the world over, right? Will that continue? There's a split among economists internationally. So until we get that crystal ball, we won't know. But you have to understand the risks in these things when you take it. Now, multiple currencies. Multiple currencies is something for, in a mortgage, is a big shock for anybody coming from a Western country, right? It is done in Eastern Europe, but for a Western country, it's a big thing to have, one, a mortgage in a foreign currency on a residential property, two, as we'll see, to have multiple parts, right? There are reasons to use foreign currencies. Somebody has currency risk. They're getting income in a foreign currency. They have assets, liquidity in a foreign currency they're planning eventually putting against the mortgage, right? One thing nobody should ever do is use their mortgage to play the foreign currency market, right? It is not, it's the inverse of a low risk investment. So it's supposed to be low risk debt. So for most Western Olim, they're coming from a market where if you've got a mortgage, let's call it $295,000, it's all going to have the same set of terms, right? In Israel, this is just an example, this three-way split. This three-way split is what the banks like to promote because it's best for their portfolios. But the Bank of Israel is fine if you want to do the whole thing fixed, right? The one thing they won't let you do is do the whole thing adjustable. So they do have a prerequisite of how much of it needs to be fixed for the whole term, how much of it can be adjustable, but no more frequently than once every 5 years, and how much can be adjustable at whatever frequency you want. The loan to value ratio, other than the ratio of your income to debt, which we'll get to in a sec, is one of the primary things that dictate how much you can borrow. So if you, for example, if you're an Israeli and you're living in Israel, you have very good income, you could technically borrow up to 75%. Understand that if you borrow 50%, the difference in the interest rate between those two loans, same person, same borrower, same property, same everything, could be more than 0.75%, right? Why? Because of that risk factor the Bank of Israel forces them to put in, right? So that, and there's other things. A foreign borrower cannot get more than 50%, and an Israeli who owns a home that they're not planning on selling can only borrow up to 50%. Income is the other major factor. And again, before 2015, the banks could determine income however they wanted. After 2015, it was dictated by the Bank of Israel and ratios became predefined. Before that, it was up to the banks to decide. That means your actual declared net after-tax income, right? And the income ratio, sort of the thumbnail reference, you're looking at 33% of that after-tax income, right, is what can go for the mortgage payment. Now, there's a lot of variances on that, and that can be higher if there's offsetting factors, but it means that it means that how your income is documented is incredibly important. And around the world, everybody has a dichotomy because people that don't play shtick, that go according to the rules, whether they're going according to GAAP and according to IRS, Mas הכנסה, the income authority in England, whatever it may be, every business owner has the same dichotomy. To the tax authority, right, they expect their accountant to take every deduction that is possibly allowed so that they go to the tax authority and say, oh, this is all we did. Here's your share. Hopefully we'll do better next year, right? Then they go to the bank and say, oh, don't listen to that. I put everything in there in the kitchen sink. But in today's current regulatory environment, that doesn't work. So I will very often work with clients even a year before they actually take a mortgage, because these are the type of things that have to be thought of up front. And sometimes it's worth paying some extra tax so that you can qualify for a mortgage that you're planning on getting. If you're from many Western countries, depending how long you've been in Israel, or depending what you're doing in that country, they will want to see your credit report and credit history. The credit score is the most important thing. The credit report itself can sometimes offset the credit score, because sometimes, like in America, credit score can be low just because of lack of things, not because you didn't pay on time, et cetera. Like anywhere in the world, you need property insurance. That's what we go to Errol for. Mortgage life insurance, I always say, is a mishigas that is not invented here. It's not even dictated by the Bank of Israel. And in all due respect, even though you guys invented the language, to all the people that are from the United Kingdom, this is something that's from the UK. So in the UK, again, part of their socialist background, there it is standard to have a mortgage life policy, which limits the age that a borrower can be, and also limits the length of the term based on the borrower's age. Now, there's no title insurance, and that's another webinar what that is, but title insurance in many Western countries makes everything much, much easier, and people like Emmanuel don't have to work as hard as they do today with title insurance. Quick overview, we have loan to values from 50 to 75%. Mortgage interest rates can be fixed, adjustable, as well as real and nominal, right? As I mentioned, mortgage can be up to a period of 30 years, but it's dependent on the person's age, right? Meaning you start with 80, subtract their age, right? And you get the maximum years of amortization. Sometimes there are ways using children, whatever, that we can get around that. One mortgage can have multiple parts, each with different terms, including multiple currencies. You can get the whole thing in a shekel fixed. There are Israeli government benefits from the Ministry of Construction and Housing, which I didn't get into here because one, they're nominal, and given that everybody lives here, I assume there was some familiarity. That's with a couple of mishaps in between. That's it. Maybe if there's any, I don't know if there's still time for questions. I'll leave that for you.
Yeah, we have time for a few questions. If anybody wants to ask, go ahead. Does anyone have any questions?
I have a question,
Oh, go ahead, Charlie.
Charlie. Since all of us here own our own businesses, I wonder if you could speak to that, because at least I have a chevra bam, I'm not atzma'i. So I could make my salary whatever I want it to be. When the mortgage bank looks at if they want to give me a mortgage, they're not just going to want to see my personal finances, they're going to want to see my business finances as well. So could you speak to that a little bit, since we have a little more flexibility how we allocate our resources, what's in our best interest if we're looking not just for a good mortgage, but something we can realistically pay back?
So that's a good point. That's what I was mentioning before. There's a dichotomy the world over. You have a chevra bam, and there's a lot of things. You can take 25% of your household expenses and your utility, et cetera. If you're using your home, right, as an office, for example, there's a lot of things that Mas הכנסה will allow you to deduct. The problem is, it's not your tlush they're looking at. It's the profitability of the company. So if, in other words, there's two extremes. Somebody can give themselves a 30,000 shekel tlush, right? If the bank sees that the company is losing 500,000 shekels a year, that tlush doesn't mean anything, right? The flip side, I've had clients where they pay themselves 3,000 shekels a month on tlush, right? But the company has made 500,000 shekels at the end of the year, right? That can be workable, right? Not every bank wants that, but the other situation where somebody's giving them a tlush that the company cannot afford because it's a loss, right? The bank will not approve. So you have to keep in mind, that's what I mentioned, sometimes it's worth paying taxes you have to keep in mind that one, the bank is going to take a 2-year look back in terms of, in other words, a year to date and then 2 prior years, both on the company's financials, your 106 and your 106s, meaning your year-end summary of the Tlush, right? So your current Tlushim over the past 3 months, one, have to support that mortgage payment, and 2, more importantly, the business itself has to be able to support what it's paying you, and it has to have some history of either profitability where you could have always taken that, right, or or you were taking it before.
Awesome, thank you.
Does that answer your question?
Does anyone have any more questions?
Yeah, I have a question. Sorry, it's okay.
Yeah,
Moshe, can you talk to us a little bit about using, sorry, I'm trying to move the screen down, so I'm looking at you. Can you just talk a little bit maybe about using Olim rights, or for anybody who has assets overseas, does the bank look at any of that as well, or is it just what's here right now?
So let's put aside Olim rights for a second. The bank, again, this is all dictated by the Bank of Israel, which is dictated by Basel III. The more the merrier. Wherever you have assets, right? Now, again, we're talking assets, not income. Wherever you have assets, it is very good to show why, because they see, right? And this isn't their opinion. This is dictated internationally in regulation, because they see if push comes to shove, right? You have for a rainy day. Now, income is important as well, but income overseas, a couple of banks, I'll leave them nameless, but the US Treasury has gotten very friendly with some Israeli banks and put their hands deep in their pockets, right? And some of the banks don't want to deal with foreign income. They literally just won't recognize it. Other banks will. So they're both important, but foreign assets are always usable and always important. Regarding Olim rights, unfortunately, the Zakaut, which is the right that everybody can get in one form or another, in 1990, Zakaut made up like 60% of the mortgage volume, and banks were only 40%. For many years, the Zakaut percentage was in low single-digit percentage. Why? Because in all these years, they haven't increased the amount. So the maximum somebody can get with the point system, assuming you were in the army, your spouse was in the army, all your siblings were in the army, various points, the maximum you can get is a little over 300,000 shekels, right? And then they only give you a choice of a linked to inflation. What they have done recently, past couple of years, and this is just because they were embarrassed, as opposed to having a rate above market, which used to be, now they have a rate that is 0.5% below the market. But again, it's a real interest. It's fixed to inflation.
Thanks.
Question.
Sure. Who was that? Sorry, Elan, go for it. Sure.
Hi, Moshe. I know in England, if you tell the bank you've got another asset, they immediately say, right, let's have a lien on it. Do they do that here as well?
No, it's not. They'll only do that. It's only dictated when they can do that. And for them, it's not worthwhile doing it because they have a higher risk profile. If they're giving you a mortgage on one property and need to take a lien on another, right, that's because of a risk factor. And for them, that the only time I see that usually is when you have a parent buying for or helping a child. So sometimes the parent has a lot of equity and there's a mortgage that is not a cash out, what's called the kol matara, because they're taking the cash out and putting it towards another property. So no, the answer is no, they don't do that so quickly.
Awesome. Does anyone have any more questions? Okay, perfect. Moshe, thank you so much. That was